The market might have already bottomed, but if you're only looking at price, you'd think the exact opposite. Because right now, fear is still present, sentiment is still fragile, and positioning is heavily bearish. But underneath all that, the data is starting to align. Before we get into it, this is not financial advice. This content is for informational and educational purposes only. Always do your own research before making any investment decisions. Welcome back to Ledger Pulse. If you want signal over noise and clarity in chaotic markets, make sure you're subscribed. Because today, we're not reacting to headlines. We're connecting the dots. And when you step back and look at everything together, a very different picture starts to form. Let's start with the macro layer. Here we have a post from the blockchain backer highlighting oil trending lower, volatility cooling, tech pushing higher, and equities near highs, pointing to a risk-on transition beginning. Crypto follows liquidity, and when macro stabilizes like this, it creates the conditions for capital to move into risk assets. This doesn't trigger instant rallies, but it sets the stage for them. Here we see Matthew Hyland and the great Matsby suggesting the shift from risk off to risk on may already be underway, with comparisons to mid-2020. If this comparison holds, we're not reacting to a move, we're early in a transition. And here, a post from Super Bitcoin Bro points out downtrend broken, double bottom forming, and key levels reclaimed. This is critical because markets don't wait for sentiment to flip. They change structure first, then sentiment follows. And right now, structure is starting to shift. Cointelegraph reports Bitcoin funding rates at historically low levels, typically seen near bottoms and during heavy short positioning. This is measurable fear. It means traders are leaning heavily bearish, and when positioning becomes too one-sided, markets tend to move against it. Here we see Strategy recently purchased $2.54 billion in Bitcoin, their largest buy in over 16 months. This is not reactive behavior. This is strategic accumulation. They're buying while sentiment is weak and positioning is bearish. That's how institutions gain advantage. CoinMarketCap highlights Tom Lee's view. The mini crypto winter may be ending, and Ethereum could outperform. But more importantly, we're seeing real positioning. BitMine purchased over 101,000 ETH in a single week, bringing their total holdings to approximately 4.976 million ETH. This is a major signal because it shows conviction, it shows scale, and it shows timing. They're accumulating during uncertainty. And historically, when ETH starts gaining strength, liquidity expands, altcoins follow, and the market broadens. This is how new phases begin. Now we layer in confirmation. In the last week, we saw 1.4 billion in digital asset inflows, strongest since January. We had 1.1 billion into Bitcoin and 328 million into ETH. Sentiment can be misleading, but capital flow is real. Money is entering the system, and that sustains moves. And here we have a post from Jungle Inc. highlighting a key idea. Financial markets are the ultimate prediction machine. At the same time, the S&P 500 is at all-time highs. Let's unpack that. Markets don't price what's happening now. They price what's coming next. So when equities are strong, despite uncertainty, it suggests that capital is already anticipating stability, growth, and continued liquidity. Now apply that to crypto. If traditional markets are forward-looking and crypto is showing accumulation, inflows, and structural shifts, then crypto may also be pricing in a future phase before it becomes obvious. This is how markets move, quietly at first, then all at once. Now we bring it all together. CoinDesk highlights billions in Bitcoin options expiring, heavy positioning near 75K, and negative funding still in place. This creates a pressure system. Everything we've covered, bearish positioning, institutional accumulation, capital inflows, and structural shift, all leads here. If price moves upward, shorts begin to unwind, liquidations accelerate, and momentum builds rapidly. This is how explosive moves happen, not from hype, but from pressure releasing. Now step back and look at the full picture. Macro stabilizing, risk-on signals emerging, structure shifting, positioning extremely bearish, institutions accumulating, ETH leading, capital flowing in, and squeeze conditions forming. This is not random. This is alignment. Does this confirm the bottom? No, but it strongly suggests we may already be transitioning, and most people won't see it until it's obvious. If you want to stay ahead of these shifts, make sure you're subscribed, because in this market, by the time it feels clear, the move is already gone. If you like the video, hit the like button, and let me know your thoughts below. Thanks for listening, and we'll see you on the next one.